So a very good evening to everyone that is listening live and to anyone that's catching this on listen again on a recording. So today is the Monday, the 25th of January, and welcome to this evening's Crypto for Beginners. My name, if you don't know me, is Katharine. I'm Managing Director for Daxi in the UK and Europe, and I will be presenting this evening's session. So for those of you that are live, hopefully you can see at the bottom of the screen there's a chat function. So if you have any questions as I'm speaking or any comments or anything that particularly resonates with you, do feel free to comment. We do record these sessions so we can share them. And obviously I will stop the recording for Q&A at the end for people that are listening live, so you can ask any questions without anybody else having to hear what you've got to say if you want to keep it with a bit of privacy. So let me just share a screen. So I press that and I press that. Very good. Excellent. Can I have a thumbs up if you can see some slides? Great, thanks Gareth, much appreciated. So quick disclaimer, the presentation I will be giving this evening does not constitute investment advice, financial advice or trading advice. Rather it's education, information and inspiration. So without further ado, I want to talk for about 20-25 minutes. Really this evening is an introduction to crypto. So if you haven't heard of Daxi, hopefully you have. Daxi is a crypto exchange. So we're one of the places that you can buy, store and learn about cryptocurrency. So one of the examples I give is it's probably a little bit like buying holiday currency. If I want money to go on, when we used to be able to go on holiday and get on planes, I go to the supermarket, which is about 3 miles from my front door, find a nice lady in her booth and swap my lovely British pounds for euros or dollars or wherever I'm off to. So we do exactly the same thing, we just do it with cryptocurrency, and of course we do it online. So over the next 20 minutes or so, I want to talk about the basics of crypto, how it works, why people are interested in it. I think people try and make crypto sound really complicated, and it's not. We can break it down into some really simple points without any jargon or anything too mystical. We'll talk about how people right now are making money out of crypto, what to avoid. Obviously, there are unfortunately some companies that have been less than reputable. So I'll talk quite a lot about keeping yourself safe, where we're at in the investment cycle, and of course, how you can get involved. So I hope that sounds good, and we'll leave some time for Q&A at the end. So a little background on myself. So I currently head up Daxi in the UK and Europe. I also contributed a chapter about crypto to a book which you can find on Amazon. A huge compliment to Daxi as a business. Obviously, they could have gone to any exchange to write the chapter as an introduction to cryptocurrency, and they came to us. Hopefully, some of the people listening to this call have managed to talk about the book or find a copy of it. Very proud to have been nominated for awards. I was nominated for a WireX Rising Women in Crypto, which is fantastic. And I spend a lot of time writing for the press, so a significant proportion of my day I write for lots of different publications, whether they're fintech or sort of banking trade magazines or cryptocurrency specialist or general press, often asking about where I think crypto is going. And the thing that really interests me is really that story of adoption. So how crypto really is becoming our dominant technology. So I'm often talking about prices and where I think that will go, but I spend a lot of time talking about really the story of who's using it and why. I also have a blog, which is about scaling up Daxi in the UK and Europe, which is syndicated across a number of publications. So hopefully I know a little bit about what I'm talking about, and you'll find some of what I'm saying interesting. So I think one of the things I want to talk about is why so many people in the UK and Europe are starting to look at crypto. I think it's no exaggeration to say we are in a wealth crisis. So this is 1 year of the FTSE 100, so obviously the value of the top 100 traded companies in the UK. A great health check for the UK economy. I don't want to come on this presentation to depress anyone or, let people feel like, there's nothing but bad news, because I think we probably all get quite enough of that. But I think really coronavirus is no question really, it's been very damaging for us all economically, regardless of where you are in the world. And look, those major economies, they estimate that around $9 trillion have been wiped off global markets. And since the beginning of 2020, we can see that around 13% has come off our FTSE 100. On top of that, of course, we've got some record low interest rates on cash. So the Bank of England sets our base rate in the UK. obviously very important for both borrowing money and for people that are saving money. So just to be clear, the Bank of England has existed for several hundred years now, and we have the lowest ever base rate on record. So there's actually quite a lot of stuff in the press, some of which I've personally written, talking about the fact that we could see negative interest rates in the near future. So this is just a screen dump from some research I was doing on the comparison websites. Typically, if you've got cash in the bank, you'll be getting less than 1% interest. So of course, with some inflation being quite high, that is bad news. It's certainly, in my opinion, we're likely to see negative interest rates. I think we haven't really seen the effect of unemployment yet, because so many people thankfully are furloughed. And quite rightly, the government's done a reasonable job of bailing people out. A lot of pain out there, of course, but I think we haven't really got a sense of quite how bad that unemployment is going to be. And I think more importantly, of course, the bill for coronavirus, we're likely to be paying for decades to come. One of the other themes that we put out a lot of content around is sort of the property market. So my background, although I've been in fintech and disruptive startups for a number of years, originally I'm a real property nut. So I spent the first portion of my career in property. I'm a property investor, and I've done reasonable amount of property over an extended period of time. And obviously in the UK, we were quite lucky. Over a long period of time, property prices typically doubled every 7 to 10 years. There were lots of people that bought buy-to-let property, all made really good money on their own prime residence, which is fantastic. So of course, right now, buy-to-let is quite challenging to make money out of. The deposits are quite high. I'm actually just west of London, so you probably need £60,000 to purchase property. It's likely that we'll see a lot more rental voids. And I think just really we're up for some pain, I think, as the recession really bites. But in better news, cryptocurrency has substantially outperformed every other asset class over an extended period. So if you look at 2020, which these figures are from, we have a little joke at Daxi that there's 3 reasons why people are buying crypto, and those are growth, growth, and growth. So over the period of 2020, just to remind you, the FTSE went down 13%, Bitcoin went up 270%, Ethereum went up 450%, our Litecoin went up 191%, and our Daxi coin went up 27%. So just to be clear, that is the reason why some people are diversifying some of their cash into crypto. So we're not an advice business. We don't tell people what to do with their money. We assist people in learning about and storing and purchasing crypto should they want to. But just to put that in perspective, in order for me to get the same amount of growth on my current account in the UK, and I bank with Halifax, that would have taken me 500 years last year to achieve the same thing with my Halifax current account as you could have done with Bitcoin. So I'm of course not comparing the risk profile, but it's one of the main reasons why people are just looking to diversify. And as we'll see over the course of this presentation, an awful lot of investment banks, hedge funds, and asset managers are all looking to do the same thing. So I just want to talk a bit about sort of crypto more broadly. And I get very annoyed when people put out content which is full of jargon and just really intended to be super complicated. So the starting point for crypto is blockchain. You often see the two sort of used interchangeably to describe the industry. So blockchain is the starting point for crypto. So it's the technology that underpins cryptocurrency. So back in the day, a database would be held in one place, and people that wanted information from the database would ping that database their information. The difference with blockchain is that the information is held across the users, and sometimes you'll hear that referred to as distributed ledger technology. So blockchain is decades old. It is certainly not a new technology, but we've certainly seen it used more in recent years. So this graphic is from Forbes, which talks about some of the different companies that are using blockchain. So there's huge amounts of different applications for it. For me personally, Daxi is actually the 3rd blockchain business that I've worked on. But you'll see it deployed across agriculture, logistics, healthcare, diamonds, and of course, lots and lots of occurrences across all sorts of banking, financial services, payments. There's been some quite good stuff recently that blockchain is being used to track the COVID vaccinations, which is fantastic. So I suppose when lots of people were first getting into cryptocurrency a couple of years ago, and I do meet them in the course of my day job, it's quite interesting to talk to people that got involved early, because of course they were buying into an asset that no one had heard of, no one really understood, and frankly was probably a bit of a punt. So if you fast forward to today, I think there's a lot of persuasive evidence that crypto is not only here, it's here to stay and it's dominant. And it's quite a sensible question. Sort of 2-3 years ago, people would ask, is crypto real? What is it? How does it work? Is it actually going to be here to stay? And some good examples of that is some of the world's largest payment businesses are very enthusiastically embracing it and using it. So these are really household names, but MasterCard is working on crypto wallet projects and they hold 80 patents in blockchain technology. Visa holds 24 patents in blockchain technology, and already today you can actually pay in crypto via Coinbase. They also invest in funding a number of crypto startups, and they work with global policymakers, including the World Economic Forum, to talk about how blockchain can help central banks. And we'll talk about central banks' digital currencies on the next slide, I think. PayPal announced over the summer they would start offering crypto, and they have already done so. In fact, that was one of the things that partly gave us some of the great growth over the summer last year. So bearing in mind that PayPal is live in 200 countries and has 320 million users, Visa is used by 1 billion people with their 61 million merchants, and obviously I'm sure there's some crossover between those two groups. These companies are very much using blockchain and crypto. You'll also see some really big retail businesses on board. So eBay has expressed a desire to accept Bitcoin. Amazon works already today with lots of blockchain businesses. And you can actually spend crypto at Amazon, Starbucks, and Uber. So the people that use our platform are not looking to spend their crypto in these places. Typically, our users are short to medium term view of their crypto and holding on to it. So they're not looking to spend it on sort of a day-to-day basis and buying a coffee. But of course, the story for crypto and it being the dominant technology is very much based on these kinds of companies getting involved. And they're what we call our payment infrastructure businesses. The other thing which is also really interesting is what's called the central bank digital currencies, which is a very posh way of saying all the central banks are now also using crypto. So it's a really good sign that the technology is being taken seriously. So even if someone says, I don't like crypto, it's not for me, I don't understand it. It's likely that most of the world banks will be moving away from physical currency. Obviously, COVID has very effectively killed cash because it's seen as unclean. Loads of shops now say, look, please use contactless payments. Loads of shops actually now don't take cash at all. The only reason I really have cash is for paying for parking in the town I live near and very occasionally giving my son some pocket money. But I don't know anyone else, I pretty much don't use cash anymore. So most of those central banks are looking at digitizing their currency, and that of course includes our very own Bank of England. They estimate that about 80% of banks will be digitizing their currency. The EU is also well ahead of that programme. So the EU has said there will be a new set of rules by 2024, which will streamline payments across the EU by using blockchain and crypto. So I mean, that's just a phenomenal sign that whether you like it or not, you will be using it fairly soon. The other thing which is super interesting is a lot of these big institutions are now coming on board. So sort of 3-4 years ago, very few of the big financial services businesses and investment banks were interested. But if you fast forward today, obviously crypto, the argument for crypto is that it's a cheaper, faster, quicker way of moving around value. So a good example of that is Bitfinex last year moved $1.1 billion worth of Bitcoin for less than $1. So unsurprisingly, lots of banks are interested in that. A good example of that is BlackRock, which has about $7 trillion under management. It's the world's largest asset manager, has praised crypto recently. Their chief investment officer did so just before Christmas. DTCC is the highest financial value processor in the world. They have blockchain projects. And an awful lot of hedge funds and asset managers are talking very actively about crypto being outside of our current financial infrastructure. So if that's kind of going down and having serious problems, crypto is outside of that. And I think particularly over the summer, you could see a lot of the banks that previously have been very negative sort of coming around to the idea. One of my favorite ones was Goldman Sachs had a call to their investors at the beginning of the summer saying, absolutely not, crypto is not an asset class. By the end of the summer, had actually hired a new global head of digital assets and was looking at their own coin. And actually a survey published by Fidelity, which is obviously quite a well-known UK asset manager, found that about a third of institutional investors have actually purchased crypto now. So this is a really interesting graph about where we're at now. So we've been using the graph on the left for a couple of years now. So this actually applies to an awful lot of tech businesses. So it's really about scaling up and adoption. So you could use that to talk about DVDs coming out, or about social media, or about the mobile phone. So it's really looking at that ski slope of when an idea takes off, reaches that tipping point. And there's a lot of talk about the cryptos being at their iPhone moment. So I can certainly remember 20 years ago, hardly anybody had a phone. Fast forward to today, I imagine that everyone on this call has a phone, and it's almost certainly a smartphone, which costs them about 800 quid. So I think it's an interesting time to be watching crypto. So if you look at those various sort of stages on the left, stage one is super early. So all those people that bought crypto 3-4 years ago when no one had really heard of it. If you look at stage two, that was probably about the last 12 months or so where we saw those phenomenal growth stats that I showed you a couple of slides ago. But we're probably now in that sort of final section where you really see the growth. So particularly from those institutional players coming to the market. So kind of early on, crypto was very individual, those kind of just people in back bedrooms playing around with it. Fast forward to today, you've got major investment banks, asset managers and hedge funds purchasing in. So if you superimpose that very general graph on the left, which applies to lots of different industries and lots of different businesses, to the Bitcoin curve on the right, which is exactly a year's worth of growth, probably most toddlers could tell you that those curves match. So I just want to talk about what that means for retail investors. So we have to acknowledge that there has been quite a lot of volatility in crypto. I actually put a blog post out today about volatility, which I think is about to be picked up by a couple of press outlets. So you do see often over the life cycle that they will have a substantial period of growth and then a correction. I think over 6 weeks prior to Christmas, Bitcoin did something like 60%, to soften by 23, to then make back 13%. So people over a 6-week period are up about 50%. But you'll notice over this graph that after each boom, there is a correction, but the next boom is at a higher level. So there's some massive, massive volumes. If you look at some of the daily volumes, they're tens of billions of pounds worth. Each boom can deliver up to 1,000% growth. And it's our opinion that next boom is going to be powered by institutional investors. There's quite a lot of evidence that's happening already. And it's also our opinion that the majority of crypto in the next couple of years will be moving from private individual investors into institutional investors' hands. So it's unlikely there'll be a sixth boom in our opinion. So I just want to talk about some of the different cryptos. So there's actually over 8,000 different cryptocurrencies. So if you're looking to get involved, it's quite challenging to work out which of those have got a strong investment ethos behind them, or what's called a use case, or often called fundamentals. So at Daxi, we're very focused on a very short list of cryptos. Our opinion is that the world does not need 8,200 plus cryptocurrencies. And in the medium term, you'll see a lot of consolidation in that marketplace because they're just not needed. So we very much focus on what's called the blue chip cryptos, because those are the ones that the institutions want. And those are the ones that have seen sort of the most growth. So these are some figures that I was working on about lunchtime today. So to give you an idea, in the last 24 hours, there's been 42 billion pounds worth of Bitcoin sold, 33 billion, sorry, I should be there, 33 billion pounds worth of Ethereum, and 4 billion pounds worth of Litecoin. And just to be clear, those three account for about 70% of the demand. So I'll say that again, there's 8,000 cryptocurrencies, over 8,000, and yet three of them are about 70% of the demand. So for that reason, we're very focused on those coins. So a quick introduction to Daxi. We are a digital asset exchange where you can purchase your crypto. Most of the other crypto exchanges are very focused on traders, so people that buy and sell daily and look for tiny little price movements. Most of our users would be people that are looking to hold for between 12 and 24 months, although of course they can exit as they see fit. And we have a UK office. We're on the FCA list. The FCA now governs crypto for KYC purposes, which is fantastic, and has actually released a list of companies that are allowed to operate in the UK. And we're also licensed in Europe, and we're the only exchange that really focuses on putting out content to assist people in understanding crypto. We think there's far too much jargon, and actually crypto has kind of been made to almost be intentionally unapproachable, which we find very odd. Another thing that's very important in crypto is to look at the security. Or if you're like me, you're old enough to remember phone banking and then internet banking coming in. Obviously, storing your assets online is important to understand the security. So we have an independent rating of A+, which is the highest rating you can get. If you start looking at some of the high street UK banks, they typically rate between D and F security for their online security, which is quite tragic. And there are a few of the sort of digital first banks that are a bit more friendly. So at Daxi, we're known for 3 individual programs. We, as I've said, are not a trading business. We don't loan out our clients crypto. We don't trade crypto on their behalf. We purely let people own crypto in their own account, whether that's in their private name or in a company name. So we have a blue chip bundle, which for whatever someone puts into their account, we split between 50% Bitcoin, 20% Ethereum, 10% Litecoin and 20% Daxi coin, with an extra 10% bonus as a sales incentive. The reason for that split is it's fundamentally outperformed pure Bitcoin. Most people have heard of Bitcoin. It's kind of like the poster child. But that spread has been the best selection. We do reassess that every couple of months to see if we've got that right by stress testing and looking backwards. But over the last couple of years, that has been the best outcome. We also have a tokenized precious metals bundle, which is very much focused on wealth preservation. So people that are focused on wealth creation tend to buy the blue chip bundle. People focused on wealth preservation tend to get involved in precious metals, and that is split between gold, silver and platinum. And we also have our own community coin called the Daxi coin, which is just about to be listed on an external exchange. And again, people have seen some really strong capital growth from that historically. So typically people who purchase the Daxi coin are looking for maximum capital growth across the next couple of years. So we have a very low entry level. We have £100 entry level for the crypto and £200 for the precious metals. Setting up an account, of course, is free. And we are just about to release an ISA product that we are super excited about, which we believe to be the first crypto ISA in the UK. So the buying process is very simple. You set up an account online. We're one of the few businesses that's actually done quite well during lockdown. I joined the business about a year ago now. And I think for the 12 months I've worked for Daxi, about 9 of them in the UK have been under some kind of lockdown, which obviously has been very challenging. But our customers don't need to leave the house. You can actually set up an account from home. It's an FCA requirement. You have to pass this KYC, which is know your client for anti-money laundering reasons. So you have to provide just a photo of photographic ID, like passport or a driving license, and a proof of address, which is less than 3 months old. After that, you can fund your account and then enjoy watching your crypto. So the app is built by us in-house. We have a big tech team, which is crypto specialist, and it's very user-friendly. It looks very much like an online banking app. So this is my last slide. Hopefully you've enjoyed this evening's presentation. Next steps, do engage with learning. We put out loads of content, whether it's webinars, there's loads on our website. We've got huge amounts of social media. We've got ebooks, we've got blue papers. Please do engage. There's loads of very interesting content. We do put out a lot of online content like webinars. So please do look at our events page. It's all listed there. Or of course, talk to the person that introduced you to Daxi. So I'll just stop sharing my screen and I will stop recording.